A lot of traders only post their winning trades, but losses are part of the game too. Today I'm breaking down this my AUDCAD loss. I'll explain what I saw, why I entered, where things went wrong, and the lessons I learned from it. Trading is not all about winning every trade, it's about managing risk and staying consistent. So first of all, I'll start by marking out my structure first, because structure is the first thing I'm looking into before the strategy or the entry model follows. Now this is the trade. I took a loss here. Now let's dive in with this marking out the structure. So I used to mark out my external in 2-hour time frame, and my internal is in 15 minutes time frame. So this internal is where I enter, 15 minutes time frame is my entry time frame. Then 2-hour time frame is where I mark out my external, and external is what is showing me the general trend of the market, where the market is currently at generally, but the internal is showing me the current trend of the market. So that is where I enter. Now let's dive in. But first of all, let me clear the chart so that you can start afresh with the analysis. So I delete everything. Now let's start with the structure. I'll switch over to my 2-hour time frame so that we can mark out our external. So this is my 2-hour time frame. This is my 2-hour time frame, and as you can see, I always consider the most recent break of structure. So this is the most recent break of structure that I'm dealing with right here. This is the most recent break of structure that I'm dealing with right here. Then I'll mark my swing high and my swing low so that I can identify my premium and discount zone. This is my swing low, and this is my swing high. And as you can see here, the market is currently in an uptrend. The market is currently in an uptrend. As you can see, the market is currently in an uptrend. So, and the market has come down from here. The market has come down to the discount zone and is now buying off to come and break this particular structure. So that is it. So now we are done checking what is happening or what happened in our external. Now let's switch over to the internal so that you can know what's happening there. So I switch over to my 15 minutes time frame. So this is my 15 minutes time frame, but before now, let me cut out the chart from here. So I cut out the chart. Now, as you can see, I only consider the most recent break of structure. That is what I consider. So as you can see here, I have this break of structure right here, this internal break of structure right here. So I have this internal break of structure right here that's broken with the body of the candle. So the next thing I'm looking out for is that the market will pull back. Okay, that the market will pull back. Maybe the market will go up. Sorry. So I'm looking out for that the market will go up, maybe small, tap on this zone right here, tap on this zone right here, then come down to the discount zone of this internal before breaking structure. So that is what I anticipated in this internal. So right here, I have marked my internal. So this is my internal break of structure right here, and this is my internal swing low. This is my internal swing low right here. So based on what I showed you guys, the next thing is to mark out my zone. Let me mark out my zone from here. I saw a zone here. So I mark my zone with the right candle from this candle here. So right here, I now extend the candle to reach where the market is currently at. So this is it. This is the zone I'm targeting that the market will tap on from here, tap on this zone, then pull back a little before breaking structure. So this is what I anticipated will happen. this is what I anticipated will happen. So right here, so let me play the chart now so that price can enter this zone. Then I will look out for my entry model to see if it can work. Now I play the chart. Let me increase. Okay. So as you can see, we've had a break of structure right here. We've had a break of structure after the market has touched. Yeah. Then what I'm looking out for is for market to come down right here and break this swing low. And remember what I used to look out for, my entry model. I talk about it in every of my video. Remember here, maybe take for instance, you have a supply zone right here. Then you mark out your zone from here. Then what I'm expecting is that the market will come down here. Then what I'm anticipating is that the market will come and tap in this zone and come down small, come and break structure, then come down a little and change character. Then I'll find my key level. Then this is what I'm looking out for. Once I see something like this, I'll mark out my key level from here. Then I will now set my pending order from the key level. Then set my stop loss slightly above the candle. Then target 1:2 depending on the structure. So this is what I'm anticipating, that the market will come and tap in my zone and come down. So this is what I'm expecting. So, and mind you, key level is when two candles have the same height, or have the same height of closing and opening of the candle right here. Then it will now break with the body of the candle from here. So this is my key level here. So this right here is what I'll be looking out for inside this. So let's move over to the chart so that you can see what is happening here. Now I've seen a break of structure. Then I'm waiting for price to come and break this swing low so that I can short this position. Now I play the price. Then another thing that occurred is that it broke another structure right here. It broke another structure right here, creating this zone, creating another swing low right here. So what am I expecting again? I will not be expecting price to come and break this one alone. I will not expect this price to come and break this swing low alone. Then I will enter. No. I will wait for price to break both of them. Once it breaks both of them once, then I can now enter from here, the first key level here, this place. This is where I will enter. So this is what I'm anticipating. If price breaks both of them, then I'll enter from there. So that is it. Now let me play it so that you can see what's happening. Now it has broken the first swing low. Then I'm waiting for it to break the second swing low so that I can enter from the first key level that I saw. Then boom, it has broken both of the swing low. Now I'll be looking out to enter from this key level because that's the key level I mostly use, the first key level here. This is where I'm entering right here. So I place my order here. Then I set my stop loss slightly above. Then target 1:2. Then let me play it. Then the market has triggered us in. It has triggered us in. Then boom, it gave us about 0.75 risk to reward, but what I'm targeting is 1:2. 1:2. So market went into our stop loss. Now, boom, it goes out. So the reason why this trade failed, this trade is probably a low probable trade. It's a low probability trade because it is a counter trend. So although this type of trade used to work perfectly, especially when it breaks these two structures. It has two structures and it broke them once. So it used to work, but you cannot question the market. Sometimes losses do happen. So that's how I lost this trade. So thank you for watching. Make sure you subscribe to this channel. If you want to learn how I trade, my strategy, so comment strategy in the comment section. Then in my next couple of videos, I will make a combined full video about my strategy, the structure behind it, and my entry model. Thank you for watching, and make sure you subscribe to this channel.